and welcome to the Property Wealth Podcast. Today, we're diving into a really exciting topic: lease options. Control properties with little cash.
Yeah, it's a fantastic way for folks to get started in real estate without needing a ton of upfront capital.
Exactly. And I think a lot of our listeners over 40 might find this approach particularly appealing. It's a strategy that allows you to control properties and create wealth without the usual financial strain, right?
Absolutely, Sarah. We'll be breaking down what lease options are, how they work, and, the kind of benefits you can reap from them.
Plus, we'll share some real-life examples and tips to help listeners get started.
And I think that's key. Knowing that you can take actionable steps toward financial independence, even if you're starting later in life.
Yes, it's all about building long-term wealth, and lease options can be a powerful tool in your toolkit.
So let's get into it. What's the first thing our listeners should know about lease options? So Sarah, when we talk about lease options, it's really about timing, right? I mean, for folks over 40, the financial landscape is shifting, and quickly.
Absolutely, Mike. People are starting to think about retirement timelines, and with inflation, it's like everything's getting more expensive.
Right, and that can be really daunting, especially if you're looking at your savings and thinking, is this enough? Lease options can provide a way to control property without needing a huge upfront cash investment.
Yeah, I've heard stories from investors who felt stuck. One guy, the first no, let's call him Tom, was in his mid-40s, and he was worried about his retirement savings. He felt like he was running out of time to build wealth.
That's common. Many people feel that pressure, especially when they see rising prices and market shifts. Tom discovered lease options and realized he could control a property without putting down a massive deposit.
Exactly! And the beauty of it is he didn't have to commit a huge chunk of his savings right away. He could use the cash flow from the property to invest further or save more for retirement.
Yeah, and let's not forget about the emotional side of financial security. When you're in your 40s or 50s, you start thinking about your family's future too. Having that sense of stability is huge, right?
For sure. I mean, it's not just about the money, it's about peace of mind. I spoke to a woman named Lisa, who was in a similar situation as Tom. She wanted to ensure that, whatever happened, her kids would have a solid foundation.
That's powerful. And with lease options, Lisa found a way to secure a property that could potentially appreciate over time, without the burden of a mortgage right away.
Right. It's like having a safety net. With the current economic trends, you never really know what's going to happen tomorrow. Lease options provide that flexibility.
Exactly. And think about wealth transfer. Many people over 40 are not just thinking about their own retirement, but also how to pass on something meaningful to their kids or grandkids.
Yes, and real estate can be a great tool for that. With lease options, you can start acquiring properties now. And by the time you're ready to retire, those properties could be significant assets or even a legacy for your family.
And that's a key point. You're not just investing for yourself, you're also building a future for your loved ones. That emotional aspect can really drive people to take action.
It makes perfect sense, especially with the way the market is right now. There's so much uncertainty, and lease options can act as a buffer against that uncertainty.
Yeah, and let's talk about inflation for a moment. It's not just a buzzword. It's a reality that affects everyone. Real estate is often seen as a hedge against inflation, because property values tend to rise over time.
Right. So when you lock in a lease option, you're controlling a property and possibly benefiting from that appreciation, even if you're not the outright owner yet.
Exactly. And I remember another investor, let's call him Dave, who was worried about losing purchasing power. He realized that by using lease options, he could secure properties now, and as the market shifts, he would be in a better position to capitalize on any increases.
That's a smart move. And even if the market does fluctuate, he's not fully exposed until he decides to buy. It creates a buffer zone, a way to test the waters.
Right, and it's all about being proactive rather than reactive. When you're over 40, you want to make informed decisions, not just scramble for solutions at the last minute.
Yes, and let's not forget the added benefit of cash flow. For many, having that additional income can help pay for unexpected expenses or support lifestyle choices as they approach retirement.
Absolutely. I often tell my clients to think about the long-term benefits of cash flow. It's not just about making quick profits. It's about creating a sustainable income stream that can support and enhance your life.
Exactly. And that kind of financial security can take a lot of weight off your shoulders. You don't want to be worrying about money in your later years.
No one does. And lease options give you that control, that ability to pivot as your situation changes.
And it's interesting because we often hear people say, I wish I had started investing earlier. But with lease options, it's never too late to start.
Right. It's all about taking that first step. And for those who are over 40, lease options can be a gateway to real estate investing without the traditional barriers.
So true. It allows you to dip your toes in the water, so to speak, and see how it feels without the full commitment right away.
Exactly. And as we shift into discussing core strategies, it's essential to highlight that lease options can fit various investment styles and goals.
Yes, and that's what makes it so versatile. Whether you're looking to build a portfolio, secure your family's future, or simply find a way to supplement your retirement income, there's a strategy here that can work for you.
Absolutely. So let's dive into some of those core strategies. So let's dive into the core strategies and rules of thumb when it comes to lease options. You know, it's such an effective way to control properties without needing a ton of cash up front.
Right, and it's really appealing for those looking to build wealth without the traditional barriers. So what's the first step someone should take when considering a lease option?
Well, the first thing is to really understand the property's value. You can start by looking at the 1% rule. Basically, if a property rents for 1% of its purchase price, it's generally a good deal. So if you find a home listed for $200,000, you want to see if it can rent for around $2,000 a month.
That makes sense. So if it's renting for less than that, it might not be worth pursuing?
Exactly. You want to ensure that the cash flow supports your investment goals. And then you also have the 50% rule, which is a quick way to estimate your operating expenses. So if you're looking at that same $200,000 property, you'd want to estimate that around $1,000 per month would go to expenses.
That's a nice rule of thumb. So if you're going with the 50% rule, you're looking at about $1,000 in expenses, meaning you could potentially net $1,000 a month?
Right, and that's before any mortgage payments, but it gives you a clearer picture of the potential cash flow.
Now, what about evaluating the deal itself? Do you have a checklist that you recommend?
Oh, definitely. Start with the property location. Look at schools, amenities, and neighborhood trends. Then check the property condition. How much work will it need? Next, consider the lease option terms. What's the length of the lease? How much is the option fee?
And what's a typical option fee anyway?
It can vary, but you typically see anywhere from 1% to 5% of the purchase price. So on that $200,000 property, you might be looking at $2,000 to $10,000. This fee gives you the right to purchase the property later.
And that fee usually goes toward the purchase price if you decide to buy, right?
Exactly. It's a great way to secure a property without committing right away. Just remember, you want to ensure the purchase price is locked in at a fair market value.
Okay, so let's say you've checked off the location, condition, and terms. What's next?
Next, you want to consider financing options. With lease options, traditional financing isn't always necessary up front. You might find sellers who are open to creative financing or seller financing.
Right, and that can really open up opportunities for buyers who might have financial constraints.
Exactly. And let's not forget to evaluate the market itself. Research local trends. Are property values increasing? What's the rental demand like? Understanding your market can really make a difference.
So if you're in a growing area, you might have a better chance of increasing your property's value over time?
You got it. And while we're at it, keep an eye on the cap rate too. A good cap rate can indicate how well a property might perform. You want to look for a cap rate that's above the average for your area.
Can you explain the cap rate a bit more?
Sure. The cap rate is calculated by taking the annual net operating income and dividing it by the property's purchase price. So if that property nets you $12,000 a year and you bought it for $200,000, your cap rate would be 6%.
That sounds like a solid benchmark. So higher is usually better, right?
Yes, but always compare it to other similar properties in the area. You want to make sure you're not just looking at numbers in isolation.
Got it. And what about different property types? Are there certain types that work better with lease options?
Generally, single-family homes tend to be the most popular. They attract families who might be interested in renting before buying, but you can also consider townhouses or smaller multifamily units, depending on your market.
That's helpful. And you mentioned earlier about the lease terms. What's typically a good length for a lease option?
Usually you'll find lease options ranging from 1 to 3 years. It gives you enough time to either save for a down payment or improve your credit score.
And during that time, you're renting, but you also have the option to purchase. It's like a trial run.
Exactly. Just make sure you're clear on what happens if you decide not to buy at the end of the lease. Some agreements might allow you to walk away without penalty, while others might not.
Right, and that's where understanding the details is crucial.
And that leads us into some common pitfalls to watch out for. You really want to steer clear of properties with excessive repairs needed that could eat into your profits.
So having a good inspection beforehand can save a lot of headaches later on?
Absolutely. And also, be cautious of overestimating property appreciation. Just because the market is hot now doesn't mean it will stay that way.
That's a tough lesson for some investors, huh?
It can be. And finally, make sure you fully understand the lease option agreement before signing. Little details can have a big impact on your investment.
It sounds like it really pays to do your homework and be thorough in this process.
Definitely. It's all about being informed and prepared. The more you know, the better your chances of succeeding in the long run. So, Sarah, one of the biggest pitfalls I see with lease options is, over-leveraging. It's so easy to get excited about a deal and think, this is my golden opportunity. But then you stretch yourself too thin financially.
Right. That makes a lot of sense. I can imagine someone jumping into a lease option thinking they can handle the payments, but then life happens.
Exactly. I had a client once who was so eager to get into a property in a hot market. They took on multiple lease options at once, thinking they could manage it all. But when the repairs started piling up, and then a couple of tenants got behind on their payments, they were really in a tough spot.
Wow, that sounds stressful. So how do you avoid that? What should people look out for?
Well, the first step is to be realistic about your cash flow. Look at your total expenses, and then add in a buffer for unexpected costs. It's all about having that cushion, because, trust me, things will go wrong.
Yeah, I think having that safety net is crucial. What about tenants? I imagine bad tenants can really complicate things too.
Absolutely. Bad tenants can be a nightmare. I remember another investor who was so focused on getting a lease option deal that they skipped the screening process. They were just happy to find someone. But it turned out the tenant had a history of late payments and, it didn't end well. They ended up losing money on repairs and evictions.
That's tough. So what do you recommend for screening tenants effectively?
A thorough screening process is key. Check their credit history, verify income, and always call previous landlords. I can't stress that enough. You want to know how they've treated past properties.
And I guess it's also about trusting your instincts, right? If something feels off?
Exactly. If they seem evasive or give you vague answers about their background, that's a red flag. Trust your gut.
Speaking of red flags, what about cash flow? I imagine ignoring that can lead to serious issues too.
Definitely. Cash flow is the lifeblood of any investment. I've seen investors focus too much on potential appreciation rather than the actual cash they're bringing in. They forget that at the end of the day, if the cash isn't flowing, you can't pay the bills.
That's such an important point. So how can someone ensure they're keeping an eye on cash flow?
Well, it's about creating a detailed budget, Track all your income and expenses meticulously. And don't just look at the projected rent. Factor in maintenance, property management fees, and any other costs that might crop up.
Right, and that's especially important with lease options, since you might not own the property outright yet.
Exactly. And then there's the timing of the market. Many people think they can time their entry perfectly. I had an investor who believed they could wait for a market dip before jumping in. But by the time they decided to buy, prices had already gone up, and they missed a great opportunity.
It's like trying to catch a moving train, right? So what's the best approach to timing?
It's about being proactive rather than reactive. If you find a good deal that fits your criteria, don't wait for the perfect moment. Remember, the goal is long-term wealth. Sometimes, it's better to get in and start building equity rather than trying to time the market perfectly.
That makes total sense. And what about hidden costs? I imagine those can sneak up on you.
Oh, they can. Hidden costs are a biggie. Things like property taxes, insurance, and even HOA fees can catch investors off guard. I know one investor who bought a property thinking it was a steal, but they didn't account for the hefty property taxes in that area. It really cut into their profits.
Yikes. So how can someone avoid those surprises?
Do your homework beforehand. Research the area, look into property taxes, and ask the seller about any potential hidden costs. If they can't provide clear answers, that's another red flag.
It sounds like due diligence is key in this whole process.
Absolutely. The more you know before you dive in, the better equipped you'll be to handle whatever comes your way.
So to wrap this up, what are the main takeaways for someone looking to avoid these common pitfalls?
First, be cautious about over-leveraging. Make sure you can handle the financial load. Second, thoroughly screen your tenants. A good tenant can make all the difference. Third, keep a close eye on your cash flow. Track everything, and always have a buffer for unexpected costs.
And don't forget about the market timing and hidden costs.
Right. Be proactive rather than reactive, and always do your due diligence. If you spot red flags early, it can save you from a lot of headaches down the road.
That's some solid advice, Mike. It's all about being prepared and making informed decisions. What do you think are the next steps for someone who might feel overwhelmed after hearing all this?
Well, first, take a deep breath. It's normal to feel a bit overwhelmed. Start by educating yourself further. Read books, listen to podcasts, and maybe even connect with a mentor. Then, create a plan. Break down your goals into smaller, manageable steps.
That sounds doable. Just take it one step at a time, right?
Exactly. And remember, real estate investing is a marathon, not a sprint. It's all about building that long-term wealth, and with the right approach, you can definitely get there.
I love that perspective, Mike. Thanks for sharing all this valuable insight.
My pleasure, Sarah. Let's keep the conversation going. So, now that we've covered the ins and outs of lease options, let's talk about some immediate steps you can take to get started.
Absolutely. It's all about taking action, right?
Yeah, first off, I'd recommend looking into local listings. Websites like Zillow or your local MLS can be great resources. You can start to get a feel for the market, see what properties are available, and understand pricing trends in your area.
That makes sense. And for those who might feel overwhelmed, they could start by just browsing a few listings a day, right?
Exactly. Just spend, 15 minutes a day. Get familiar with what's out there.
And once they've found a few properties that catch their eye,
then they could move on to analyzing those deals. There are some fantastic tools out there, like the Bigger Pockets Calculator or Deal Check, which can help you crunch the numbers.
oh, I love those tools. They really simplify the analysis process.
Right? And don't forget Rentometer. It's great for checking rental rates in your area, so you can see if the potential cash flow makes sense.
That's a smart way to gauge if a property could be profitable.
For sure. And if you're not sure about a property's value, just reach out to a local real estate agent or appraiser. They can provide insights you might not have considered.
Yeah, leveraging local expertise can save you a lot of headaches down the line.
And speaking of expertise, joining a local real estate meetup can be a game changer. You'll meet other investors, share experiences, and maybe even find a mentor.
That's such a good idea. Networking is so powerful in this business.
Absolutely. And don't forget to analyze just one deal per week. It could be a property you're interested in, or even a hypothetical case. Just get in the habit of evaluating deals.
That's a great way to build your confidence over time.
And while we're at it, I'd recommend picking up a couple of books to get deeper insights. The book on rental property investing by Brandon Turner is one of my favorites.
Oh yeah, that one's a classic.
And Real Estate Investing for Dummies has some really practical tips too.
Those are both great resources.
You could also check out podcasts that focus on real estate investing. They can be so motivating and provide fresh perspectives.
Like the Bigger Pockets podcast?
Exactly. They cover a range of topics and bring on guests with real-life experiences.
I love hearing those success stories. It really makes it feel attainable.
It does, right? And remember, starting small is key. Just focus on taking one step at a time.
Yeah, and celebrating those small wins can keep you motivated.
Definitely. And if you find a property you're interested in, consider reaching out to the owner directly. You might be surprised at how open they are to creative solutions like lease options.
That's a proactive approach, and it shows you're serious about investing.
Right. So with these tools and habits in your pocket, you're ready to move forward.
Yeah, it's all about building momentum now.
Exactly. So those are some practical first steps. Now, let's bring this all together. Well, Sarah, that was a lot to unpack, wasn't it? Lease options really do offer a unique path for those looking to invest without breaking the bank.
Absolutely, Mike. I think one of the biggest takeaways is that lease options allow you to control a property without needing a large upfront investment. You can actually start investing with very little cash.
Right, and another key point is the flexibility they provide. Investors can negotiate terms that suit their situation. It's about creating win-win scenarios for both the buyer and the seller.
And let's not forget the potential for cash flow. If you structure the lease option correctly, you can generate income while you're building equity in the property. That's a big plus, especially for those looking to secure their financial future.
Exactly. And of course, understanding the legal aspects is crucial. It's important to have a clear agreement in place to protect yourself and your investment.
Yeah, being well informed really sets you up for success in this strategy. So for anyone listening, remember that real estate investing, like lease options, can be a powerful tool for building long-term wealth. It's about finding the right strategies that fit your goals.
For sure. And if you found this episode helpful, we'd love for you to like, subscribe, and maybe drop a comment. What was your biggest takeaway? Or if you have questions, we're all ears.
And don't keep this to yourself. Share this episode with someone over 40 who's thinking about investing in property. You never know who might need that little nudge.
Next time, we'll dive into wholesaling real estate step by step. It's a fascinating topic that can open up even more opportunities.
Can't wait for that. Thanks for joining us today. We appreciate you taking the time to listen, and we hope you feel inspired to take your next steps in real estate.
Take care, everyone, and happy investing.